What's going on, guys, and welcome back to another video. So we have a very important IRS announcement that we need to get to, and I want to address how this could potentially impact you. Because the reports that we are hearing is that the IRS is going to reduce tax audits for about 31 million people. And you're probably thinking, well, that's really good news, right? Well, stick around. I'll explain why this is somewhat misleading. So again, just watch this entire video and I will explain all that stuff in just a moment. First, all I ask is if you enjoy these daily updates, do me a favor, it takes just 2 seconds. Go ahead, hit that like button, and let's begin. So first off, if you file taxes, then one of the worries that most people have is they're always wondering, will they ever be audited, right? Well, we have some very interesting news coming out of the IRS. The IRS is now saying that they are going to reduce the tax audits for lower income earners. And in particular, those that claim the earned income tax credit. It's the EITC credit, okay? Now, according to the IRS, they say tax returns that claim the earned income tax credit are actually historically more likely to be selected for an audit. And unfortunately, this means that Black Americans and Latinos are more likely to be audited as a result. Well, look at this article from the New York Times. It says IRS changes audit practice that discriminated against Black taxpayers. That was from earlier on today. Now, here's what I find is very interesting. The IRS and the Biden administration, they understand that changing the tax code is going to be very difficult. They also understand that going and getting additional money for the IRS is going to be hard as well because Republicans are attacking the IRS funding and trying to claw a lot of that money back. So they know that as well. So they can't increase revenue because by increasing revenue, that means they got to change the tax code. They can't do that. And they can't bring in or just use more of their funding because it's trying to be pulled back. So what are they doing right now? They're trying to bring in more money and they're changing the way, the wording of how they run their operation. Now, here's what we know. Right now, Black Americans and Latinos are 3 to 5 times more likely to be audited compared to white Americans. Now, that's just one of the facts, but here's some more facts for you. According to the IRS, they don't plan on reducing the tax audit percentage for those that claim the earned income tax credit. Because most people were assuming that, okay, the IRS is going to reduce the tax audits for lower income Americans. No, they're not reducing the percentage. What they're doing is they're increasing the percentage of higher income earners. So that is somewhat going to offset the amount of people that are being audited, because now it's not like 50 or 60% are low income, which I think it's more like 80% of those that are audited are lower and middle income households. The other 20%, and again, don't quote me on these figures, but the other 20% are the higher income individuals. Now they're saying, oh, we're going to audit more higher income individuals. So instead of it being an 80-20 split, it's going to be like a 60-40. So it's going to look better if you look at those numbers, when in reality, it's the exact same thing. And in fact, they might actually be coming after more lower income earners. I'll explain more on that in just a second. And the reason for this, okay, because again, they're not reducing the tax audit percentage. Okay, they're changing it. But here's the reason why this is such a big deal, because of this right here. The IRS is looking to hire 3,700 new agents to crack down on wealthy tax cheats. It says the IRS hiring thousands of new workers to crack down on wealthy Americans. Are they really going to do that? Well, here's what I can tell you. That's the plan. The IRS wants to hire, I believe it's 3,772 new IRS agents, but they have to have accounting experience and they have to have experience in audits, or they have to have years of experience, or they have to have a bachelor's degree in accounting as well. Okay? So all these people that they're planning on hiring, and again, it's going to be, I believe, like 250 locations across the United States. But what they're planning to do is go after those that are not paying their fair share. The reason why I say fair share is because that is what the Biden administration, that is what multiple lawmakers are asking for, is for the higher income earners to pay what they are actually supposed to pay. Because here's what's happening. Lower income Americans that, let's say, make $20,000 per year, and they go and pay, let's say, $2,000 in taxes. Okay? Again, I'm just throwing that out there. That's 10%. And then you have, let's say, a higher income earner. Let's say they make millions of dollars per year, but they have all these deductions because they have real estate and they have losses and they have businesses and so on and so forth. And then in the end, they don't pay a penny in taxes, or they pay a very small amount, like $1,000. So you make $1 million and you only pay $1,000, or you make $1 million and instead of paying 10%, which would be $100,000, no, you're going to pay about $30,000. So you're paying 3% of your income versus lower income earners that are paying 10%. That's what people are saying is that's not fair. All right. And again, that will be for a different video, but that's what's currently being discussed. Now, is this potentially good news or is this bad news for lower income earners? Well, it's not necessarily good news. And the truth behind this is the fact that the audit percentage isn't changing. According to one IRS group, they say, and I quote, "This move should scare people. The IRS is gearing up to tax more Americans, and once they have success with this, it will extend to the middle class and eventually go after the lowest income earners." That's potentially scary. That if the IRS finds success by hiring new agents with experience, which they're going to pay them about $175,000 per year, that's their salary, about $125,000 plus bonuses and benefits, comes up to about $175,000 per year. If they have success with this, what they're going to do next year is they're going to hire more agents. They're going to go after more Americans, because that is what the U.S. government wants. They want the American people paying more in taxes so that they can use that money and go fund other things, like COVID, like this war in Ukraine, right? Student loan forgiveness, all these different agendas. That's their plan. Now, I want to be very clear. The IRS has made many statements saying that they will use part of the $80 billion from the Inflation Reduction Act of 2022 in order to make the tax system more equitable. Okay? They want equality across the board. And Congress has also acknowledged that a complete overhaul of the tax code, it's not going to happen with a divided Congress. So this might be the only hope that the Biden administration even has at going after higher net worth individuals, is to let the IRS use some of their funding, adjust their methods and their system to go after those that the Biden administration is not going to be able to touch. Now, lastly, Republicans in Congress, they do want to see that the IRS budget gets cut for this year. And I bring this up because, well, for one, we're talking about the IRS, but the second reason is because within the next 12 days, we have to have a government funding bill. This government funding bill is currently being discussed, and there's a chance that we see multiple agencies get shut down, because there's a good chance that Republicans and Democrats do not reach a bipartisan agreement and pass a bill to fund the government for fiscal year 2024. Now, reports indicate that if the only thing holding up the negotiations and to keep the government funded is this talk of funding for, it could be for anything. It could be for Social Security, the Social Security Administration. It could be for Ukraine or COVID. It could be for many other priorities, right? Well, according to these reports, Democrats may agree to some spending cuts from the additional $80 billion, which I believe there's $10 billion of that has already been pulled back. It's already been clawed back in the previous bill regarding the debt ceiling. So that lost $10 billion. So now they're at $70 billion in additional revenue over the next 9 years. It was 10 years essentially, but over the next 9 years because we're already a year in. Well, if this happens, okay, what we could see is instead of $70 billion that the IRS has, maybe the IRS only has an additional $50 billion. Okay? So that money's kind of sitting there, and it's already allocated to a certain certain thing. But the problem is the money hasn't actually been spent. It's there. Hasn't been spent. So now could Republicans claw that money back, pull it all back, pull potentially $20 or $30 billion back, spend it on other priorities, just to ensure that they do have that reduction in spending? Well, that's currently what's being discussed. So that is the big IRS announcement out just recently. If you guys have any questions regarding the IRS, regarding taxes, you can put your comments down in the comment section below. You can put your questions down there. I am not a tax expert by any means, so you can comment, but if I do not get to your specific tax question, it's most likely because, again, I'm not a tax expert. I'm not a CPA. Okay, go talk to somebody that knows taxes. I'm just here providing you with this announcement so you do know what is going on. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.